Welcome to our channel, where today we break down the latest developments in tariffs and unpredictable markets. I'm Corey McLaughlin, and in the next 3 minutes, we'll cover the newest twists in the trade war, market volatility, and what you can do to stay ahead. Let's start with the headline. A new tariff storm is brewing. The U.S. is set to impose an additional 50% tariff on imports from China at 12:01 a.m. tomorrow, pushing the total new tariffs on Chinese goods in 2025 to a staggering 104%. With tariffs now affecting imports from 85 more nations, these moves could trigger further escalations and market turbulence. Earlier today, the major U.S. stock indexes opened strong with hopes of a relief rally. However, the S&P 500 closed 1.6% lower, about 5% less than its intraday peak, while the volatility index, VEX, surged to around 52, signs that investors are on edge. The fallout from Liberation Day and other recent events continues to unsettle markets. In a recent development, Treasury Secretary Scott Bessent revealed that while dozens of countries are open to negotiating on tariffs, China has chosen a defiant path with a 34% retaliatory tariff. Despite President Trump's promise of more severe measures, including the new 50% hit, China remains unmoved even as Trump's social media posts hint at a willingness to strike deals if pressed, adding to the intensity. Swing U.S. memory chipmaker Micron Technology has announced plans to levy surcharges on certain products, memory modules, and solid-state drives to mitigate the impact of these tariffs. With manufacturing spread across Asia, Micron's move underscores the broader cost pressures looming over U.S. businesses. On Capitol Hill, Trade Representative Jamieson Greer faced tough questions from senators about higher consumer prices and the future of trade policy. Greer emphasized that while reducing the trade deficit is a long-term goal, you shouldn't expect industry-specific exemptions that could undermine the overall tariff strategy. These remarks only deepened market unease. So what does all this mean for you, the investor? It's clear that predicting the next twist in this trade war is nearly impossible. Instead of trying to outguess the market, our Director of Research, Matt Weinschenk, advises you to prepare, don't predict. Diversification, prudent risk management, and strategic stop losses are key to weathering this storm. At Stansberry Research, we believe that free markets drive wealth and innovation. Tariffs, essentially taxes on imports, distort the efficient allocation of resources and can slow economic growth. Whether these measures are the result of strategic moves or missteps, one thing is clear: the global economic system is being fundamentally reworked. Thanks for tuning in.